The RV market is in trouble, and dealers are feeling the heat. What looked like a booming industry just a year ago has flipped upside down. Now lots are jammed with unsold rigs, used prices are crashing, and manufacturers are pulling back hard. If you've been thinking about buying, selling, or trading an RV, you need to know what's really happening behind the showroom banners. This isn't a seasonal slump. It's a full-blown meltdown. In this video, I'm breaking down the 5 reasons dealers are panicking and what it means for the rest of us. Let's get into it. Let's start with the most obvious red flag, inventory overflow. If you've driven past an RV dealership lately, you've probably noticed how packed the lots are. I'm talking nose-to-nose units, jammed so tight you can barely walk between them. That's not by accident. It's a direct result of manufacturers overproducing and dealers overordering during the pandemic boom. Back then, RVs were flying off the lot. Buyers were lined up, paying full price or even over asking. Dealers got used to that rush and kept ordering like it would never end. But here's the problem. Demand didn't just slow down, it shifted. As interest rates climbed and inflation tightened family budgets, fewer people were willing to sign on for a new rig. Meanwhile, manufacturers kept cranking out units, flooding the pipeline. What you're seeing now on dealer lots is the result of that mismatch. Rigs keep arriving, but buyers aren't showing up like they used to. Now, this wouldn't be such a big issue if these RVs were paid off and sitting there like free inventory. But that's not how it works. Almost every unit you see on a lot is tied to a floor plan loan. The dealer borrows money from a bank to stock that RV, then pays interest on it until it sells. So the longer it sits, the more it costs. In a healthy market, that's manageable. But when hundreds of units are just sitting for months on end, those interest payments become a financial anchor. Some dealers are trying to get creative, offering deep discounts, bundling in gear, or pushing hard on financing deals. But even with all that, it's not enough to move the metal. And the longer these rigs sit, the more they age. A shiny 2025 model might look brand new today. But once those 2026s start rolling in, it's suddenly old news. Dealers know this, and it's got them sweating. Every week that goes by without a sale means shrinking margins and rising debt. In some markets, especially in the Southeast and Midwest, lots are reportedly holding 20 to 30% more inventory than they were designed for. That's not just inconvenient, it's a liability. It ties up space, capital, and manpower. And with fewer buyers walking through the doors, dealers are being forced to make tough calls. Some are canceling future orders, others are trimming staff, a few are even shuttering locations. Bottom line, inventory overflow is a visible, daily reminder that this market is out of balance. And for dealers, it's turning into a slow-motion crisis. They're not just sitting on RVs, they're sitting on debt. And unless demand rebounds fast, the pressure's only going to build. Now let's talk about the used side of the market, because that's where the real panic is setting in. Used RV prices aren't just dipping. In some cases, they're falling off a cliff. And if you're a dealer, that's a nightmare. Because unlike new inventory, which at least has a manufacturer's suggested price to lean on, used RVs are valued strictly by what buyers are willing to pay. And right now, that number is dropping by the month. This all started when the wave of pandemic buyers who overpaid for RVs in 2020 and 2021 began trying to sell. Maybe they were downsizing, maybe they didn't use it as much as they thought, or maybe the payments got too heavy. Either way, they listed their units. But when they tried to trade in at a dealership, they got hit with a rude awakening. Their rig was worth tens of thousands less than they owed on it. That's called negative equity, and it's spreading fast. Dealers don't want to touch underwater trades. It's too risky. So they offer rock-bottom numbers, often so low that owners walk away insulted. That's pushed more sellers into the private market, trying to list their RVs on Facebook, Craigslist, RV Trader, you name it. But here's the catch. Buyers are seeing the same headlines. They know prices are falling, so they're not in a hurry either. That leads to a standoff. Sellers clinging to yesterday's values and buyers holding out for tomorrow's deals. Meanwhile, wholesale auction prices, the real heartbeat of the used market, are plummeting. Dealers who do buy used units are turning around and selling them for less than what they could have fetched just 6 months ago. And that's if they sell at all. Some are sitting just like the new ones, aging by the week and racking up costs. This situation is even worse for owners who financed during the peak. Imagine paying $80,000 or $90,000 for a fifth wheel that now books for $50,000. You can't trade it in, you can't refinance, and you can't sell it without writing a check to your lender. That's a financial trap, and more people are stuck in it than the industry wants to admit. The ripple effect is brutal. Dealers are hesitant to buy used units even when the price seems right, because they don't know where the bottom is. That uncertainty kills confidence. And without confidence, the used market stalls. No trade-ins mean fewer new sales. Fewer new sales mean tighter cash flow. And the cycle feeds itself. For now, used prices are still in freefall, and until that levels off, dealers are going to keep panicking. Because a shaky used market doesn't just hurt one side of the business, it throws the whole system out of whack. This is the part of the meltdown that's quietly spreading behind the scenes, and it's one of the biggest reasons dealers are panicking: loan defaults and repos. Most people don't pay cash for an RV. They finance it, often over 10, 15, even 20 years. And during the pandemic boom, a lot of buyers stretched themselves way too thin to chase the RV dream. Now that dream is biting back hard. Let's break it down. Imagine someone who bought a new rig in 2021 for $90,000. Interest rates were low, and they got in with a long-term loan. 3 years later, that same RV is worth maybe $60,000, if that. But they still owe $80,000. That's a $20,000 gap. And that's what we call negative equity. The rig is worth less than the loan, and the payments haven't gotten any easier. Add in rising interest rates, inflation, and tightening family budgets, and what do you get? A wave of missed payments. And once those payments stop, the repossession clock starts ticking. Dealers might not see the full scope of this yet, but the lenders do. And it's creating a ripple that's already hitting the wholesale market. Repossession yards are starting to fill up, and the units coming in aren't junkers. They're recent model year trailers and motorhomes that owners just couldn't keep up with. Some are still in great shape. Others, not so much. But either way, the lenders don't want to sit on them. They send them to auction, where prices are already under pressure. That flood of repo units adds even more downward force on used prices, which, as we just talked about, hurts dealer trade-ins and resale values. For the small dealers, this is especially scary. They rely heavily on trade-ins to move inventory and close sales. But if a customer walks in upside down on their loan and can't trade up, the sale falls apart. Multiply that across dozens of deals, and suddenly your monthly revenue drops off a cliff. Even finance companies are reacting. They're tightening lending standards, requiring bigger down payments or higher credit scores. That limits the pool of qualified buyers even more, making it even harder for dealers to close deals. In short, loan defaults and repos are like the iceberg below the surface. You don't always see it coming until it's too late. But make no mistake, it's there, and it's growing. Dealers are already seeing more customers walk away from deals or come back trying to offload rigs they can't afford. It's a dangerous spiral. And unless something shifts in the broader economy, it's going to keep spinning. Now let's zoom out and look at where these RVs come from. The factories. This part of the meltdown isn't as visible to the average buyer, but it's hammering the industry from the production side. And for dealers, it signals a loss of confidence in the entire supply chain. During the pandemic, RV manufacturers couldn't build units fast enough. Production lines ran overtime. Suppliers pushed parts out the door at record speed. Workers were being hired left and right. It felt like a gold rush. But in 2025, the machines are slowing down and the layoffs are starting. Take a drive through Elkhart, Indiana, the so-called RV capital of the world, and you'll hear a different tune. Some plants are operating on reduced hours, others have furloughed staff, a few have quietly shut down entire production lines. Companies like Winnebago and Thor Industries have already signaled falling demand in their investor calls. That's not just corporate speak. That's factory jobs, supplier contracts, and freight orders drying up. So what does that mean for dealers? Well, first of all, it tells them that even the manufacturers are expecting things to get worse before they get better. And when the factories stop producing, it creates tension in the pipeline. On one hand, dealers are still sitting on too much inventory. On the other, they're worried that if they wait too long to reorder, they'll be left out when the market eventually rebounds. It's a tricky balance, and it creates uncertainty. Uncertainty kills confidence. And when dealers aren't confident, they don't invest in advertising, sales events, or expansion. They go into survival mode. The factory side of the story also reveals something else. Just how many people and towns rely on this industry to function. When a factory slows down, the ripple hits hard. Parts suppliers, trucking firms, campground operators, repair techs, all feeling the slowdown. The entire RV ecosystem is more connected than it seems. And for small-town America, especially in the Midwest, this isn't just a blip. It's a potential economic crisis. Restaurants that once served plant workers see fewer customers. Local mechanics have fewer rigs to service. And it all comes back to the dealer's lot. Because when that inventory sits still, the whole chain starts to sag. Dealers are panicking not just because sales are slow, but because the signals from upstream say it might be a long road back. The production slowdown is like a warning light on the dash. The question is, how many will pay attention before it's too late? When dealers panic, they don't throw up their hands, they get creative. And right now, we're seeing some of the most desperate sales tactics in years. These aren't scams, but they're designed to make you feel like you're getting a deal when you might actually be overpaying, overfinancing, or taking on more risk than you realize. First up, bundling. That's when a dealer throws in a free generator, solar package, extended warranty, or even a camping starter kit. Sounds great, right? But dig into the numbers, and you'll often find those add-ons are baked into the price. The rig didn't get cheaper. It just came with more stuff you may not have asked for. Then there's creative financing. 0 down? Sure. But read the fine print, and you might find a longer loan term with higher interest. Suddenly your monthly payment looks manageable. But over the life of the loan, you're paying way more than the unit's worth. Some dealers also sneak in dealer prep fees, document charges, or mandatory delivery packages, all to pad margins without lowering the sticker. We're also seeing more price anchoring. A rig that was listed at $130,000 is suddenly on sale for $115,000. But what they don't tell you is that the manufacturer's suggested price was never really that high to begin with. It's a psychological trick to make a small discount feel massive. And don't forget about trade-in games. Dealers might offer top dollar for your trade, but only if you buy at full price. Or they'll show you a strong trade number, then quietly increase the sales price of the new unit. It's a shell game, and unless you're comparing numbers carefully, it's easy to miss. Why are dealers pulling these moves? Because they're desperate to keep the lights on. Every unsold rig on their lot is costing them money. And in slow markets, the only way to move inventory is to get aggressive. The good news is that if you come in informed and prepared, you hold the power. But if you're not careful, you could fall for a deal that's only good on paper. Bottom line, dealers are doing everything they can to protect their margins in a market that's working against them. And if you're buying right now, your best defense is knowing exactly how those tactics work. So there you have it, the real reason dealers are panicking in this RV market meltdown. From overflowing lots and crashing used values to loan defaults, factory slowdowns, and last-ditch sales tactics, the pressure is coming from every direction. If you're in the market to buy or sell, timing and knowledge are everything right now. Remember, a good deal isn't just about the price on the window. It's about understanding what's happening behind the scenes. And that's what we're here to do. If this video helped you see the bigger picture, hit that like button, subscribe for more real-world RV insight, and drop a comment below. Are you thinking about buying, selling, holding off? I want to hear your story. Thanks for watching, and I'll see you down the road.